And we do see the stock market opening higher in the green across the board, right near those record highs. In fact, our markets guest earlier told me he thinks record highs are in the cards by the end of the week. So we want to talk more markets. And joining me now remotely this morning is Marta Norton, Chief Investment Strategist at Empower. Marta, great to have you on the show, joining us from Chicago this morning. And what do you make of the market at these levels?
Well, it's interesting, of course, because I think there has been some expectation or at least some nervousness on the part of investors as they watch the developments in the Middle East on what the impact would be in markets, particularly equity markets, but of course the bond market as well, as investors wonder whether the safe haven status is going to, remain a factor there. I think what we have to remember when we take a look at what's happening in the Middle East and then project our expectations for markets is that investors really care about future cash flows, their expectations for earnings, their expectations for income. And when we take a look at, the impact that Iran, that Israel can have on global markets, their market sizes, of course, aren't really a major factor. So I think the larger concern is, of course, the oil question, and that seems to be contained for the at least immediate future. So I think the market continuing to push higher, even with this turmoil that we see, is something that makes some fundamental sense.
Interesting. So I'm glad that you mentioned that, because of course we've been following those developments, and we know traders down here on the floor have been very closely watching, in fact, what is transpiring in the Middle East over the course of these past 2 weeks or so. From a positioning standpoint, Marta, is a way that you're looking at an ideal portfolio in this scenario?
Well, I think the thing that I keep in mind when I think about especially geopolitical events, they have a whole range of outcomes that are possible, and none of which are really entirely predictable. I think one of the things that jumps to mind for me when I think about geopolitical events is turning back to Russia invading Ukraine. And almost 100% of the pundits at the time were saying that Ukraine would fold overnight, that this was going to be kind of a steamroll situation. And of course, that hasn't been what we've seen. And so I think what's really important as investors look at this environment and position their portfolios is a real emphasis on diversification, on breadth, on not trying to necessarily project headlines directly into portfolio positioning. So in my estimation, a real emphasis on thinking about breadth across the stock market, breadth across the bond market is the right way to go in this type of environment.
Interesting. Now, my guest earlier noted that we have seen some recovery in the tech names. I know the tech sector is one that you're watching too, Marta. That sector had led for many years in the wake of the pandemic. Do you think that it could be breaking out in this scenario as well?
Well, I find the tech question so interesting because one of the things that's a real touchstone for me and for the team at Empower is valuations and how things are priced relative to their fair value. And when we look at technology as a sector, that sector looks to be priced at extreme valuations. So not just modestly overpriced, but relative to its own history at kind of that 9th, 10th decile. So very pricey, and that tends to suggest weaker returns. But what the nuance there is that the Mag 7, some of those tech names, some of them found in communication services, consumer discretionary, that particular subset is actually much better priced from our estimation. So entering the year of 2025, Mag 7 looked expensive. Today, after the AI punch, after the tariff punch, it looks more approachable. So oddly enough, while tech is expensive, I still think there's opportunity in these AI-related Magnificent 7 names.
What does it mean for industries or sectors, if you will, that could benefit from some of President Donald Trump's policies, notably policies of deregulation and tax cuts? I'm thinking of sectors like the financials, for instance, perhaps even the oil space.
Yeah, that's it. It's kind of this additional variable that we're throwing into the equation. If you take a look at the academic research on deregulation and what impact that has on the economy, there's a lot of varying insights, but I think the general idea is that as deregulation takes place, you do see a pickup in earnings. And so areas where you could see more meaningful deregulation, you certainly could expect potentially stronger returns. One of the things that really jumps out to me, particularly as we think about the push to deregulate, but also the tax bill and what impact that could have, is the real emphasis on expensing and allowing companies to deduct 100% for depreciation purposes. And academic research suggests that can be a real help to investment by companies, particularly in periods of higher inflation. So when we think about kind of those pushes that we could see for companies that are spending big on AI, that's a real positive. You mentioned financials and some of the changes that we can expect there. So I think there is this kind of third variable that's adjusting how markets are going to behave in 2025.
Yeah. Marta, I do want to ask you about some of the deal activity that we've seen of late and what that might signal about the path forward for stocks. I mean, certainly we've seen several IPOs, in fact, 2 days of double IPOs here at the stock exchange of late, and certainly some M&A action as well.
Yeah, it's kind of interesting because I think the expectation heading into 2025 was that this was going to be a very busy year from a deal making perspective. And yet, of course, it's been a lot more contained than people had anticipated, in large part related to a lot of the uncertainty that's come out of the seismic changes we've seen in trade policy, some of those still to come. And yet, there does seem to be a bit of a relaxing on that front where we are seeing activity pick up. I think there's still some question marks there, just as we're still in an uncertain climate, but potentially that uncertainty is on the decline. And so we will see a little bit more continued activity. Interestingly, we also saw that in consumer confidence surveys, right? We saw the most recent numbers showing a little bit more certainty as well, though still higher than a year ago. So I do think we're kind of shifting in this environment to maybe a touch more confidence than we had previously.
Marta Norton, Chief Investment Strategist at Empower. Marta, thanks so much for joining.
Good to be here.